Imagine you're at an auto show, wandering through gleaming new concept cars. Right next to the familiar gasoline guzzler stands a sleek, all-electric hypercar with a transparent body, call it the Palantir P1. While everyone else is still arguing over gas prices and emission standards, tariffs, this hypercar is already cruising on autopilot-powered data streams. Markets rebounding, from tariff sell-offs to all-time highs, tariffs, sell-offs, and market lows. Flash back a few months, the stock market was acting like a toddler in a candy store, thrilled by every rally, then storming off in a tantrum whenever a new tariff headline dropped. Trade tensions between major economies led to a broad sell-off in early 2025. Tech and growth stocks took a beating, front and center. Investors, suddenly jittery, asked, "Are trade wars back?" as if they'd just discovered the sequel to a horror franchise, but by mid-2025, things had changed. Negotiations cooled briefly, tariff threats looked less ominous, and the market bounced back, heading toward prior all-time highs set before the sell-offs. The S&P 500 and Nasdaq Composite were on recovery trajectories, shrugging off earlier volatility. It was like your favorite sports team losing the first quarter but then returning after halftime to dominate the game, except there were no mascots, just algorithms and traders letting out a collective sigh of relief. Why high-valuation stocks thrive in a comeback. When markets recover from a sell-off, two things happen almost in tandem: risk appetite returns. Investors who'd huddled in safer sectors, think utilities or defensive staples, start reallocating back into growth names. They've had their salad and now want dessert, preferably a calorie-rich high-beta slice of tech. Rotation into high-growth sectors, stocks with lofty price-to-earnings (PE) or price-to-sales (PS) ratios often lead the charge upward because investors are willing to pay a premium for future growth when near-term macro fears subside. It's like a Black Friday sale. Once the site down errors clear, everyone bombs the add to cart button for that hot gadget. Palantir, with its forward-looking AI/data narrative and thus high valuation multiples, found itself squarely in the crosshairs of this rebound. While earnings season proved modestly mixed for other tech firms, Palantir's unique blend of government contracts, enterprise deals, and AI-driven solutions gave it a rare vintage wine allure, admittedly expensive, but potentially delivering a remarkable vintage 5 years down the road. Palantir's growth story, still riding the wave. From government roots to commercial heights. If you've only heard whispers about Palantir, here's the lightning bullet point version. Founded in 2003 to build data integration software for intelligence agencies, CIA, NSA, etc. Known for Gotham, a platform for government intelligence, and Foundry, an enterprise data hub, public since 2020, trading under the ticker PLTR, Palantir cut its teeth on federal contracts that demanded ironclad data security, rapid prototyping, and solutions for mission-critical scenarios, like tracking illicit finance networks or supporting COVID-19 vaccine distribution. From there, it ventured aggressively into commercial sectors, healthcare, automotive, manufacturing, energy, and even banking. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. KPI highlights: why investors keep buying Palantir. In the latest earnings call, Q1 2025, Palantir reported revenue growth of approximately 40% year-over-year, YoY, record free cash flow, FCF, generation, beating guidance by a whisker, expansion of customer count, including a slew of Fortune 500 names, upsell/cross-sell rates improving, existing customers spent 30% more on new modules and AI tools. Put simply, Palantir is proving it can grow both top-line revenue and free cash flow margins, a combination that keeps cheerleaders, analysts and momentum traders cheering. Breaking down FY 2025 guidance: higher revenue, whisker-tight FCF. At the beginning of 2025, Palantir Management guided for FY revenue in the $1.05 to $1.1 billion range and FCF of $150 to $170 million. Mid-April 2025 update. They nudged FY 2025 revenue guidance to $1.1 to $1.15 billion and FCF guidance to $165 to $185 million. That may not sound like rocket fuel compared to the broader tech world, but it's akin to giving more fuel to an already roaring engine, especially in an environment where peers trimmed guidance due to tariff headwinds. This guidance raised signals that management sees sustained demand across both government and commercial channels. Investors took note: if a company raising its own bar for revenue and cash flows in a recovering market doesn't get awarded a green thumbs up stamp, what will? Hence, Palantir's share price continued its climb, even as peers in high valuation land wobbled. The Fed's Beige Book, a grim economic snapshot. What's in the Beige Book? The Federal Reserve publishes the Beige Book 8 times a year, offering a dashboard of anecdotal reports from business contacts across the country. Its latest edition, May 2025, paints a picture of declining growth. Several districts reported sluggish retail activity, manufacturing softness, and slower expansion in services. Rising prices, despite easing energy costs, input prices for machinery, raw materials, and labor rose. Some businesses cited persistent supply chain bottlenecks, slow hiring. Many firms remain hesitant to add headcount, citing economic uncertainty and elevated labor costs. In other words, the economy is chugging along, but it's not exactly sprinting. Think of it as a marathon runner hitting wall halfway, breathing hard, muscle cramps on the horizon, but still striding forward. Why Beige Book matters to investors. When the Fed hears reports of slowing growth, rising prices, and sluggish hiring, it can influence monetary policy, rate hikes or pauses. Investors, habitually glued to every word from the Fed, interpret the Beige Book as an early tremor before potential rate changes. If the Fed leans dovish, pausing or cutting, risk assets can rally. Conversely, a hawkish interpretation, more hikes, could spook high valuation names that rely on low interest rates to justify their lofty multiples. Hence, when Palantir Management raises guidance despite a backdrop of slowing growth and sticky costs, it suggests that Palantir's business model is somewhat recession-resilient or even countercyclical. That impression matters, because in a sea of companies trimming sails, Palantir appears to be hoisting a bigger flag. How Palantir could thrive amid slow growth, rising prices, slow hiring. Cost-effective alternatives: don't tax my software, optimize it. When budgets tighten, whether government or corporate, CEOs and CFOs don't necessarily slash spending on mission-critical software. They reassess it. They ask questions like, can I get the same output for 20% less, or can I consolidate 3 platforms into one? That's the moment Palantir unfurls its cape and declares, behold. Foundry and AIP do 3 jobs in one: ingest, integrate, analyze. So why pay 5 different providers? Efficiency gains: let the robots do the boring stuff. With sluggish hiring, companies are reluctant to add headcount, even when workloads increase. That's where Palantir's push into AI-driven automation and PalAgent agents shines. Palantir ontology-driven AI agents can automate repetitive data cleaning tasks, produce predictive risk models, and generate real-time insights, thereby letting a lean team produce the bandwidth of a much larger workforce. In a world of slow hiring, where finding and retaining skilled analysts is as challenging as finding a unicorn in Times Square, automated efficiency is gold. Palantir's suite can turn a skeleton crew into a lean, mean, data-crunching machine. That's especially attractive when inflation is pushing up salaries and benefits. Why pay 10 analysts $80,000 each when 3 will suffice with AI support? And this is where Palantir could 100x in the coming decades. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.